Welcome to Closing Day. Closing Day is a real estate show that covers everything about real estate right for the first moment when you're maybe sitting in the basement of your parents' house thinking, maybe I should get out of here, all the way up to the point when you finally own a house. It's closing day, you've got the keys in your hand. My name is Jeff Del Grand, I'm your host today, and what we're going to be covering is there's people that don't think they can get into a home for one reason or another. Might be the financing, might be their credit. And we have a solution for you. And today I have with me Brandon Shaw. And Brandon is a rent-to-own specialist and a debt consultant. Brandon, welcome to the show.
Thanks, Jeff. It's good to be here. Appreciate you having me.
It's great having you here. Now, Brandon, this is something that's a bit unique. And I'm wondering, why did you get started with those type of unique segments of the industry?
Yeah, it's a good question. I've always been interested in real estate and investing in real estate especially. Over the past several years, I've gotten into owning some properties and that sort of thing, and I thought, hey, it would be really nice to share this experience with other people. Yeah. So I started learning more about different ways to get into real estate, and rent-to-own came up as one of those sort of unique ways, as you pointed out, where you can really help people who don't necessarily qualify the traditional way, right. And still make decent returns as an investor at the same time. So what really spoke to me about rent-to-own was being able to stay within that realm of real estate investing, yes, but helping people who actually really need it at the same time achieve their goals and get them on solid footing in the world of real estate.
Right, so someone who might be stuck in the rental industry for the next 5, 10, 20 years can come to you and through your company possibly say, it's not actually own that piece of real estate, but get into that piece of real estate they're going to own today.
Mm-hmm. Yeah, okay. Exactly. Rent-to-own, it's really the best option for people who are eager to get into their next house now. It's a longer term house. Yeah. But they, as you pointed out in the introduction, they're just missing qualification for the conventional mortgage for one reason or another. Oftentimes, we see that the down payment is too small, right, for lenders to accept. The credit is a bit too low, so maybe their credit has been bruised for a number of reasons. Yeah. There's previous bankruptcies, or consumer proposals. Divorces are another reason that people will get into financial difficulty. Unfortunately, yes. Yeah. A lot of times people are self-employed. Yeah. And they don't have the income that is necessary on paper for the lenders to secure a mortgage for them. So for whatever reason that they're missing out on that mortgage, rent-to-own is an option for them to get into that long-term house now while we bridge the gap for them between renting and owning. So it is, as you said, it's unique, and there's a lot of moving parts to a rent-to-own. It has to be done the right way, which I'm sure we'll get into. Yeah. But certainly if it's done properly, it can be a quick and effective way into a home ownership situation.
Yeah, I think it's a brilliant idea. Mm-hmm. So let's say I'm interested in a rent-to-own. For whatever reason, I just won't qualify for a mortgage. I can't actually go through the real estate channel and buy a home. Mm-hmm. What steps do I have to go through?
Well, what would usually happen is you'd probably go to your bank first or a mortgage specialist, which a lot of people do. People that are looking at rent-to-own generally have been shown the door, unfortunately, by those institutions. Yes, and they're looking for the next option. So when we come across individuals like yourself, let's say you're looking for that rent-to-own solution, we would qualify you the same way as you'd need to qualify for a conventional mortgage. So we'll look at your income, your employment situation. We'll look at your credit, your score and what's on your report, your debt load, all those sorts of things. And then from there we'd be able to determine two things really. One, do you qualify for a rent-to-own program based on all that? And two, how long of a term will you need to become what we call mortgage ready, meaning you can qualify for the conventional mortgage. And if you do qualify, what we'll do is we'll bring you in and we'll meet up and have a face-to-face discussion, and we'll go through more of the details, the finer details of the rent-to-own process. Some of the numbers that are going to be key for success. So by numbers, I mean your rental amounts and your down payment savings and all that sort of thing. And we'll go through some of the processes involved in the rent-to-own to make sure that you're fully on board with the program and that you fully understand what's entailed. Because the worst thing that can happen in a rent-to-own situation is you jump right in too quickly and then you realize maybe halfway through or even a year down the road that this isn't the program you thought it was, and you have the potential to leave a lot of your time and money on the table if you walk away. So we are in the business of making people into homeowners, and we mitigate the risks of people walking away at all costs. So we do that by thorough screening up front.
Yeah.
Okay, so once you do qualify and you're on board and you want to proceed, what we'll do is we'll start looking for a house. You'll be able to look with a licensed realtor, obviously. And it could be your realtor, or it could be, if you don't have a realtor, then we have a healthy stable of realtors that will help you to find that house.
Yeah.
And the house, of course, needs to meet certain criteria, which we'll talk about. And then once the house is found and we can secure it at the right price, you essentially move into that house. We have an investor that will purchase it. You will move into the house as a tenant in the traditional sense while we work with you to become mortgage ready. And then at the end of your rent-to-own term, you purchase that house and it's yours.
That's great. So you really set up the expectations, because that's the worst thing when someone gets into any type of deal. They have one type of expectation in their mind, and there's a different outcome. It sounds like the way you're laying it out, the end result is figured out and planned at the very beginning.
Exactly. I mean, that's how you really maximize success in a rent-to-own program. It's the legwork has to be done up front, because there are enough things that can happen over the course of a couple of years. But to mitigate that, you make sure that you're qualified properly. You're in a house that you like and that you were active in selecting.
Yeah.
And if you can do those things, then your chances of success are high. And as I said, we're not in the business of putting people in positions where they can fail. We're here to make you into a homeowner as quickly as we can, and most importantly, as comfortably as we can. On that point, I would just say that we don't want people to have to break the bank in order to make a rent-to-own situation work.
Yeah.
You still have to be able to maintain your lifestyle. Of course, there may be some sacrifices that have to be made, but there's no sense in entering a rent-to-own if it's going to put you, if you're living off credit cards for a few years in order to make it work, because it's not in your best interest.
Yeah, that's a really good way to lay it out. I joke around with my clients all the time saying, a bank will qualify you to purchase a house of this value, and let's say it's $600,000, and people are like, "Whoa, I can afford that." And like, no, not that you can afford it.
Yes.
Bank doesn't care if you ever take a holiday in your life, you ever go out for dinner, as long as you're paying interest, right?
That's right.
Where in your case, you're actually making sure these people can have a life as well.
Exactly. So part of our qualification process before rent-own, during, and even we set up expectations for after the rent-own is completed, is looking at your monthly budget and really delving deep into it and making sure that not only can you afford that house today, can you afford that house in 3 years, 5 years when the mortgage is yours, and if anything happens over the course of that time. A lot of young people are looking at rent-own. Well, if you're planning on having a child in the next few years and your income might drop, can your budget sustain that? So we look at some we look at some different scenarios with people to make sure that they're well positioned for success in a rent-own situation and a home ownership situation altogether.
That's funny because even through CMHC or the banks, a couple can come to me and they can have 18 kids, and it's no harder for them to qualify than a couple with no kids. And yet we know, kids are expensive.
Yeah, that's right. Yes.
So what would the average term be? Like, how long would somebody get into a rent-to-own agreement?
That's a good question. We get that a lot. So typically, a rent-to-own term is anywhere between 2 and 4 years.
Okay.
Now, the length of term is based on a couple of factors. One, probably the most important factor, is how much down payment do you have to start with. Now, a down payment is required to maximize your success in a rent-to-own.
Okay.
I'd always be wary of rent-to-own scenarios that are offering a no money down sort of thing. And I'll explain to you why. Let's say, in order to get a conventional mortgage, you need to come to the lender with $30,000 for a down payment, but you only have $5,000 today. Okay.
Right. Okay.
In a rent-to-own term, let's say we want to get you there within 3 years, so that's 36 months. You've got to now save $25,000 over 36 months. Now, I don't have the quick math on me, but it's probably around $800-900 a month that you've got to save on top of your rent, on top of your utilities, on top of your living expenses. And for a lot of people, their budget can't handle that.
Yeah.
So it's very important that you factor that into the length of the term. Now, that's why I say having a sizable down payment is important, because the more you have to begin with, the less you have to force save over the course of the rent-to-own term. So the way to look at the rent-to-own term is it's not a whole lot different to what some renters may be doing presently. You know, you're in a rent-to-own, you're still paying rent as a traditional tenant would. The main difference is you're living in the house that you'll eventually own, which you were active in selecting. So you have that to sort of light at the end of the tunnel, and you're in a forced savings program. So you're paying the investor the rent, and then in a separate payment you're paying a down payment savings portion, which is added to the initial down payment you put down to enter the rent-to-own. Okay, so there's no premium, as in the rent is any more than what rent would be, but there would be a slight premium which goes into a savings account to help build up your down payment. It goes towards your down payment, exactly. Okay. So now, you mentioned different homes with qualifications. What type of homes do you mean by that? Sure. Well, as I said, you as a potential rent-to-own buyer, you in our program are active in selecting the home that you're eventually going to live in, rent, and then purchase. So it's nice because you know, if you're going to be the one living in the house and you're going to be the one eventually owning it, you might as well be involved in picking it out and making sure you enjoy it and like it. Now, having said that, there are some, because there is an investor that is taking a risk to some extent in taking on you as a rent-to-own client, they've got to make that purchase of the property. So they do have some say in what the property is going to be as well. For the most part, it's fairly flexible, but there are some types of properties that are a little more challenging to get the investor to put their money down on. So I guess those properties would include, you know, very rural properties or farm properties. Those ones are tough. Anything with well and septic can be challenging. And it's not that they're completely ruled out, it's just they're a little more challenging, and the investor pool becomes a lot more limited in properties like that. Yeah, so I guess like most lenders, they want to see a property that's more marketable, you know, downtown, wherever, Orangeville, Bolton, you know, anywhere where there's more houses around, they tend to like that a little more. You just have to remember that they're mitigating their own risk as well. I mean, they're invested in your success. They obviously want you to succeed as a rent-to-own tenant. But they've got to make sure that their bases are covered as well. And that's more where I would come in as a rent-to-own specialist, is to make sure that you as the rent-to-own client, your interests are protected as well as the investors, and sort of matching that up to make sure that the whole process runs smoothly. Okay, well, one question I'm going to come back with is, what if someone just has too much debt load to carry all their expenses? So we'll be right back. Stay tuned. Welcome back. Welcome back to Closing Day. My name is Jeff Delgrand, your host, and I'm here today with Brandon Shaw, and we're talking about rent-to-owns. Brandon, one of the things we talked about just before the break was that someone can use their own real estate agent to buy a home. How are things like purchase price set, things like that? It's important very good question. It's very important for people to understand that renting to own doesn't mean you're going to buy the house at the price it's listed at today, because it is going to take you some time to become, as I said, mortgage ready, right? So if that term is 2 years, 3 years, or 4 years, what we have to do, and this is part of what I was talking about, protecting the investor's interests as well, the way the investor would make his return is to appreciate that property over the length of the term. So
Right.
let's say you qualify for, a purchase price based on your income, a purchase price of $400,000 today.
Right.
Your rent-to-own term is 3 years. Basically, what we need to do is take that $400,000 mark
Yeah.
and scale it back 3 years on the market appreciation. I know that sounds pretty convoluted, but what I mean by that is if you qualify for $400,000, we have to assume that that's going to be $400,000 at the end.
Okay.
So in order to build that appreciation in, we work back from that, and that means you may qualify for a house that's $360,000, $370,000 today. Okay, and the way we calculate that appreciation is based only on fair market. So and there's all sorts of ways to calculate that through sites like CMHC,
Yep.
regulated bodies like CMHC,
Yeah,
and you
yeah.
look at 10-year trends, 5-year forecasts, and that sort of thing. And I think it's important to note that with our program, we calculate that appreciation very conservatively. So, in Dufferin County, for instance, the appreciation, just like most of anywhere near Toronto or Central Ontario, has been appreciating pretty high. Sometimes 8-10% in some places.
Yeah.
Our appreciation is nowhere near that for a couple of reasons. One, we're not greedy. We don't want to gouge people unnecessarily. Two, the buyout price for you as the rent-to-own client needs to be realistic and reasonable at the end of the term, because let's say the market doesn't appreciate at 10% over the next 3 years. That's very risky sustainability. If then we can't charge you $500,000 for a house that's only worth $450,000, because it's going to be difficult for you to get a lender to give you a mortgage on that, because now the lender's looking at it and saying, well, why am I giving you so much mortgage for a house that's not even worth that? So there's a couple reasons why we are conservative in the buyout price for you, but the other important thing to remember is that we set that buyout price for you from day one. So before you enter the program, before you sign any documents, before you agree to even start looking at a house, we make sure that you're aware this is your maximum purchase price at the end, this is your maximum purchase price today, and we set that price in writing, and that's what we're held to. So let's say you're qualified for 400 and that house is worth 475 at the end of the term. Well, guess what? You get to buy it for 400 and you've instantly have $75,000 of equity.
Yeah, and that's perfect. That's everybody wins then.
Exactly.
Right. The investor's going to win through their investment. The person who bought the rent-to-own is going to win because they get into a home right off the get-go with equity.
Exactly.
Yeah, that's better than you can do just through normal real estate. Everybody should do rent-to-own. Right?
That's right. Yeah, if only.
If only. Yeah, so what about setting rent prices? How do you figure that?
Well, what you have to remember is sometimes in a rent-to-own, the rent is going to be a bit higher than what you would traditionally pay. And the reason for that is you've got an investor coming in, buying that house right off the market.
Okay.
So the rent that you would pay as a rent-to-own client, to be fair, has to cover the investor's mortgage payments, obviously the principal and interest. It's got to cover his property tax payments, and it's got to cover his home insurance payments. So the rent is going to be all-encompassing of those, which oftentimes can be higher than a house that's been a rental house for the number of years, because that landlord or that owner's mortgage payments are likely a lot lower than somebody new coming in off the market and putting their down payment and securing their own financing.
True, but I mean, if someone buys their own house, they're going to have those expenses anyway.
Exactly.
So it's not really a premium, it's just reality.
Exactly,
Okay,
exactly. Well, and remember that the investor is going to be putting more down payment than you would, as likely as someone coming in to buy their first house or buy a primary residence with only 5 or 10% down. So your monthly payments will cover, your rent will cover that.
Yeah.
So as I said, the investor will cover the property tax and the home insurance. And then you would also cover your own utilities, just like in a typical rental scenario. And you'd be responsible for getting your own tenant's insurance or contents insurance in pretty much any rent-to-own scenario.
Okay. Now what happens if, like, life happens, right? Someone gets to a point partway through the rent-to-own program and they lose a job or something and they can't make a rent payment. What happens in that scenario?
Well, it's a good question, and it's, we understand that life does happen. And to which I always tell people, well, listen, if you own a house and you're paying a mortgage and you lose a job or get a divorce, or something worse than that happens.
Yeah.
The mortgage company doesn't have a lot of sympathy for you. If you stop making mortgage payments, it's a matter of time before somebody knocks on your door and asks you what's for dinner.
Usually not much time. Yeah.
Exactly.
Yeah.
When you're a traditional tenant, not in a rent-to-own program, if you stop making rent payments, it's again an inevitability that your landlord's going to come knocking and say, "Where's the rent?" or
time to move on.
Time to move on.
Yeah.
In a rent-to-own scenario, as I said, we are invested in your success. We are definitely more flexible than either of those scenarios, because we want you to succeed as much as you do. So we will look at every situation independently. There's no blanket response to that question. We have to see what are the circumstances, what are the factors. Are you able to get yourself out and back on track? And if yes, great. We'll try and work that into the program somehow. Maybe we extend your buyout, instead of 3 years, you do it 3.5 years or 4 years. And if your situation is so dire that you're unable to continue, then we will find a way to get you out of it without losing the shirt on your back. So there is a human element to our program, whereas there isn't always when you're dealing just directly with a mortgage or with a landlord.
Yeah, well, if you deal with a standard mortgage, it's really cut and dry, unfortunately. Power sales happen quickly.
Right.
If you deal with CMHC, they actually have a department that will help you out if you have problems.
Great.
Because they see it the way you see it. They see it as a partnership. And they find that they become more profitable by helping their partner than they do by just pulling the rug out from under them.
Of course, as they should.
Yeah. So it's nice to see that you've got that. You start off with the expectations in the right place, and then you're into this partnership with these people. Well, you get to the end of the 3 years. Let's say it's a 3-year term. They're going to buy the house back out. Is it a tough process? What is it at the end? What has to happen?
It's all built into the program before you even really get underway. It's all explained to you. The contracts are all in place. Now, when you get to the end, it's important to work with an experienced mortgage professional.
Yeah.
Because,
okay.
like yourself,
Thanks.
because there are, it's not like you just walk into the bank and say, all right, I've completed a rent-to-own program, give me my mortgage, please.
Right.
There are a handful of lenders that will finance a rent-to-own, sort of home ownership situation. But that rent-to-own has to be done in a specific way from start to finish in order for them to be able to meet their lending criteria. So we will set you up to make sure that you can acquire that mortgage, but you will need to see a registered mortgage broker in order to make that happen. Okay. So, but we are certainly there to walk you through the process. We don't leave anybody hanging.
All right, so the expectations are set ahead of time. Everything is laid out. If the person needs help with credit, counseling, anything like that, you're there to...
Absolutely. I mean, as I said, one of our primary goals with you is not just to stick you in the house and say, see you in 3 years. We understand the reason you're renting to own is because there's something holding you back. You're not yet mortgage ready.
Right.
So, in most cases, people, they don't know how to fix their credit or how to get mortgage ready because that's why they're in this position in the first place. So we help them to put together a roadmap for whether it's credit repair or debt solutions, that sort of thing, so that by the end of the term they are ready in the eyes of the mortgage lender, which is most important, to get that mortgage and own the house. Really?
That's great. So something I just want to pop back to for 1 minute. You said that they can go buy a house through their own realtor. So the real estate agents, all you real estate agents out there, a rent-to-own client is a real client. They still get paid for doing their job, right? Real estate agent still gets paid for doing their job.
Absolutely. The only difference for the realtor is that they're making an offer on behalf of the investor now instead of that original client.
Wow. And I'm guessing your investors are pre-approved.
Yes, yes, for the most part.
Well,
yes,
just
they
in
are.
This market especially, it's so
you have
important.
to be. You have to be. But one thing I would caution, if there are realtors out there watching, is it's difficult to get a rent-to-own pushed through when there's already been an accepted offer, and then you learn you can't get financing.
Oh, right.
The whole rent-to-own screening process itself can take a few weeks.
So that should happen
a few weeks
before.
moving quickly, yes. So this, generally we like to have the client screened and qualified before we even start looking at houses. There have been several times where we get a call from the realtor saying, I've got an accepted offer, we finally got a house we've been shopping for months, but my client can't get financing. Let's do a rent-own. And it's just,
Yeah.
the turnaround time is just not realistic. And a good rent-own investor is not just going to jump in without doing their due diligence. So
And
just
that
a
makes
word
sense.
of caution that to keep the expectations in check in that sense.
Yeah, and so rent-own companies, some of them have had issues through the years, and I imagine through those issues they have learned, and I guess this is where you come from, all those lessons through the years as well. And so this is why you're setting things up more for success. I think it's great that you plan everything ahead of time too. So there's nothing hidden, and you're using the normal real estate channels. Yeah, I can't see any downside to this. I think it's I think it's a brilliant idea.
I think what's important to remember is that the rent-to-own industry it's unregulated, it's unlicensed. You need to make sure that you're working with somebody that you A, that you trust, and B, who obviously knows the ins and outs of rent-to-own. As I said at the outset, there's a lot of moving parts to making a successful rent-to-own. The unfortunate thing about rent-to-own is that it's very easy to get into one with somebody who doesn't really understand the process. But so getting out is the key.
So they really need to get into the business with somebody who knows the business.
That's right.
Like yourself.
That's right.
Right. That's just amazing. That's great. Now, we're not going to be able to get in on this other topic I wanted to talk to you about today, so hopefully we can get you back. But we were going to talk about how somebody with too much debt could buy a home, right? So there is a solution for that as well. So we will get back to that. Unfortunately, we won't be able to touch on it today. But Brandon, thank you very much for coming out to the show. I know you had to do a bit of a trip to get here with all that bad weather, but Brandon Shaw's here. He covers the whole area, and I'm sure you've seen his name popping up and down throughout the show. And we'll hope to have you back soon.
Perfect. Thanks for having me, Jeff.
Bye now, friend.